All right, so today I wanted to make a video on every single stock that I own in the energy sector. Some of them, like this one, are actually MLPs, which aren't technically stocks, but you know what I mean. They're all in the energy sector. So the first one is ARLP. This is probably my favorite one, to be honest. And the reason is quite simple. I mean, they have a 13% dividend yield right now. And on top of that, they have a 26% free cash flow yield and earnings yield. So based on the current levels of earnings, that dividend is easily maintained, right? And I mean, another crazy thing that I noticed about this stock is if you would have bought it at the troughs of in 2020, you would have a 102% yield on cost, right? You literally would be getting your entire investment back every single year. So I'm sure there was someone out there that did that. So congrats to anyone that did, right? But that's just crazy. But again, there's several other reasons that the fundamentals in this company are very good. I mean, the growth is very good. The financial health is very good. Current ratio 2.68. That's very good. Profitability, they're crazy profitable, like very good. I mean, 27% free cash flow margin, very good. 40% return on equity, that's very good as well. And again, PE of 3.8, that's below the average. Price free cash flow of 3.8, that's well below average. Again, I don't think there's anything to not like about this company, in my opinion. The next one is CIVI. This is Civitas, another solid company, in my opinion. If we look at the dividend here, again, 2.5%. They have been growing that actually fairly nice. They just started paying one in 2021, which has gone up fairly nice, right? I mean, again, another company that you'd have a very nice yield on cost if you'd have bought it at the troughs, 15%. A very good company, in my opinion, right? I mean, if we look at the valuation here, it actually does not show up, so we can't really look at that. But again, very profitable, very good management. Return on, and they don't have a return on equity here. That's weird. Growth is solid. Financial health, current ratio 2.8. Again, very good. Another solid company, in my opinion. The next one is Canadian Natural Resources, CNQ. Again, another very solid company, in my opinion. If we look at the dividend here, 4.3%. That's growing actually very quickly. If we look at that payout ratio, though, based on free cash flow, it's only 41%, right? So, I mean, we got a free cash flow yield of about 10%, 10.5%. Again, very nice. Though, honestly, those are the companies that I like the most as far in this sector goes, is the ones that have that really high earnings yield, because, number one, they could be paying a crazy good dividend. And number two, they have a lot of cash available to reinvest into new projects, to pay down debt, to buy back shares, and to increase that dividend over time, right? And if prices come down a little bit, they still got a little bit of wiggle room, right? So that's something I very much like about these companies that have the higher earnings yield. The next one is ConocoPhillips, COP. Again, solid company. I do have a very small position. Honestly, the only oil and gas company that I have anything remotely significant right now is Devon, which I'm going to be selling because it's underperformed and it just isn't as good as what it once was. I do want to get a lot more of ARLP, Alliance Resources. I'm just worried the price keeps going up, so I'm trying to get as much as I can while the valuation is still good. ConocoPhillips is growing their dividend nice. They've been growing at 12% per year. That's on a payout ratio of about 22%. So again, another company with a very healthy earnings yield, free cash flow yield. Again, exactly what I like. The next one is EOG. This is another one of my favorites here. If I'd have one of the top three, this would definitely be one of the other ones. Again, they're growing their dividend very quickly. Payout ratio 22%, 2.7% roughly dividend this year. Again, a very strong company, in my opinion. The growth is very good. The financial health is very good. Current ratio 2.39. Profitability is insanely good, even a higher free cash flow margin than ARLP. If we look at the valuation, again, it is more expensive, though, although it is significantly below its 5-year averages, right? So again, I think it's still a good price where it's at, in my opinion. The next one is EPD, Enterprise Products Partners. This one you're buying mainly for the dividend. I don't think you're going to get crazy share price appreciation. But again, you got a 7.3% yield right now. Again, based on free cash flow, that's a 95% payout ratio. So again, that's definitely a little bit concerning. But again, this is a company that solid balance sheet. Again, their debt isn't overly concerning. And again, I know their current ratio is below 1, but their debt is really long term, which means they won't really struggle to pay that off. If we look at its valuation, again, I still think it's, if anything, I would prefer to get it a little bit cheaper, to be honest. It's definitely near its 52-week high, so I would want to get it cheaper. Actually, it is at its 52-week high. I would definitely prefer to get it cheaper. Below, let's say 26 would be where I would look to pick it up. The next one is Occidental Petroleum. Again, this is one of Buffett's favorites, as I'm sure a lot of people are aware. Very small position in this company. Although, again, I do like it. They cleaned up their balance sheet very good recently. And again, they've started to increase that dividend pretty significantly over the past couple years, which, again, is exactly what I want to see. And again, I think if you hold this company for the next 10 years, I think you're going to do pretty good. So that is all my oil and gas companies that I own right now. Like I said, I think in order, I would say ARLP is my favorite, followed by EOG Resources, and then if I had to pick a third one, probably Civitas. But I think that ARLP and EOG Resources are my clear top two. Again, like I said, everything here, my opinion, do your own due diligence. But again, that is my thoughts. So again, if you liked the video, please like, comment, subscribe, all that good stuff, and stay tuned for more.